In today's income tax class, we are going to discuss about problem number 10. This is a problem taken from Gaur and Naran. Income tax, Gaur and Naran. Actually, this is a essay type question, slightly typical problem. I won't say this is very difficult problem. It's a slightly typical problem, but it is very apt one for essay type question, that is for 15 marks or 20 marks. See, this is a problem for computation of total income. Basically, you are all well aware that total income in the sense all the five heads of income uh, will be applicable maximum to the extent of the informations available. We have to calculate the related heads of income. After the total income is calculated, then we have to apply what are all the eligible deductions. Then we have to apply the deductions. And in case of assessment of individual, after that total income, gross total income, chargeable income, we have to calculate the tax liability. See, in this question, we are not required to calculate tax liability. We are given with the informations. So, to the extent possible, we have to calculate related heads of income. We have to calculate. Then deductions we have to apply. Then final gross total income we should calculate. See, you take first the informations are given in the question. Mr. Yash Raj, a physically handicapped assessee, submits the following informations. The person is having the rent collected is 25,000 per month, and municipal tax is paid by tenant, which is 50% of the total taxes. Please underline this point. Basically, the condition says that any municipal taxes paid is eligible to deduct from the annual rent, and moreover that municipal tax should be paid by the owner of the house. Here the municipal taxes paid by the tenant is 15,000, okay, and which is 50%. So 50% is 15,000, and also the amount paid by the tenant. So another 50% is paid by the owner of the house. So the rent collected is 25,000 per month. That comes to 3 lakhs. Minus municipal taxes paid by the owner of the house is 15,000. Net annual value 3 lakh minus 15,000. Net annual value we are having. From that we have to apply the standard deduction at the rate of 30%. Please underline and mind it. Here the term deduction is only for house property income. In the later part of the problem, we are going to discuss about deductions under 80 series. Okay, this is 30% we have to apply on net annual value. Balance is house property income. And the second head of income here, eligible one is the person is engaged in poultry business. So obviously we can calculate profits on business, that is poultry business. Here it is specifically given that poultry farming business income is 71,000, that we have taken. In addition to that, the business expenses, research expenses is also given. That is, that business expenses that comes to, you paid 10,000 to a veterinary college of Calcutta. It is engaged in research of poultry farming. Related business research expenditure. So that 10,000 we can claim as expenses. Then contribution to rural development fund, which comes to 1,000 rupees. This is given as point number 6. Have a look on that. 1,000 rupees given to rural development fund notified by the central government, that also we can claim. So 71,000 minus 11,000, balance is business income. Okay, then another one information available here is speculation income. Two things we are having here. One is speculation income of 10,000. Another one is speculation loss is also given in the question. So basically you know very well, speculation income is eligible to adjust the speculation loss. So balance is the loss to be carried forward for subsequent period, loss of 10,000. Okay. Then another one is capital gain is not given in this question. No information related with the capital gain is available. Then other sources. Basically, what are all the informations coming under other sources? Dividend, then debenture interest, bank interest, interest on securities. Okay, so here it is given as dividend from Indian company. Mind it carefully. If required, you please underline that point. Previously, it was exempted. Now, dividend from the Indian company is also taxable, right? That 9,000 is taxable. Dividend on units of mutual fund, 2,000, that is taxable. Then bank interest fixed deposit. Please put a point on that. I will tell you why we have to mark this point. Bank interest, it is taxable. Then interest on debenture, that comes to 33,000. It is also taxable under other sources. Then interest on government security, that is also taxable. So these informations are taken under the heading called other sources. Okay, income from other sources. So total income from other sources, that comes to 1,16,000. Now coming to this point of interest, bank interest on FD. We have to mark that point? Because any interest received from the fixed deposit is eligible for claiming the deduction under TTB. Okay, TTB, 80 TTB to the maximum of 50,000. Total amount of interest received is 57. Under TTB, it is eligible up to 50,000. So that amount we are taking here. This is one important point you should keep in mind. Then another one is in the previous paragraph, the person is a physically handicapped. In the first line itself, it is given as Mr. Yashraj, physically handicapped assessee. So, in case of a physically handicapped assessee, if the person is having the physically challenged person, that problem exists to 40%, then he is eligible to claim deduction, right? That deduction is under 80U. Okay, 80U, he is eligible to claim 75,000 as the deduction. It is not the amount specified in the question, it is ad hoc amount of 75,000 you can claim. Whereas if the person is having the physical disability of more than 60%, then he can claim a deduction of 1,25,000. Please mind it carefully. This 75,000 and 1,25,000 are ad hoc deduction. Okay, so whatever the amount given specified for that problem, you can claim 75,000 or 1,25,000. You can claim it as the deduction. Point number 1. And point number 2, are we specified with that disability of what level of disability that assessee is having? It is not specified. So it is considered that assessee having the disability of 40%. Okay, so that's why we are claiming it as 75,000 as the eligible amount of deduction. That is the quantum of deduction for 80U. Mind it carefully. 80U is the related section for this. Applicable section for this disability. Okay, 75,000 you can claim. Number 1. And another one point here is that point number 7. It is given in the question. He borrowed 50,000. Please underline that point. He borrowed 50,000 and contributed towards a pension plan. So any amount of payment made for the pension plan through the insurance company is eligible for claiming deduction under 80CCC. Also, for additional information, you please note it down. Pension plan through that your employer, central government or any employer, is 80CCD. Okay, so here he paid the amount of contribution for pension plan of insurance company HDFC Life, but at the same time the payment should be made out of your own resources, not the borrowed fund. Here it is specifically given. He borrowed the amount and paid it for HDFC pension plan. So that is the problem of in this question. You are not eligible. That person is assessee is not eligible for claiming deduction under 80 triple C. Okay, so no 80 triple C is applicable. Other applicable deductions are 80 TTB for interest on fixed deposit, and 80U for physically handicapped person, a dog amount of 75,000. These two things you can claim. Okay, so total gross total income is 3,75,500 and minus deductions. Then net income of taxable income is 2,50,000. You can also call it as chargeable income. The final chargeable income is 2,50,500. This is the amount eligible for claiming the for calculating the tax liability. How will you calculate the tax liability? Up to 2,50,000 is exempted. Here it comes to 2,50,500. So another 500 rupees you can consider that 500 rupees. If you apply that tax for 500, what it will come? It is very meager amount, negligible amount only. It will come fractions, so that you can avoid that. So no tax calculated in this problem. Okay, so like this you will have to calculate. If the question is asked for combination of total income and taxable income, individual heads of income should be calculated. You total it, apply the eligible deductions, then taxable income is what that you will have to calculate.